This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news about money. You can listen to the Rich Dad Radio program anytime, anywhere on Android, YouTube, and etc. And please leave a review. Also, our programs are archived at richdadradio.com. We're also now on, what's it called?
Rumble and Locals.
And the reason is that, as you know, we're now socialist media. It's not social media, it's socialist media. And we're having a conversation with our guest today, John MacGregor and Ted Siedle. Can you trust the source of your information now? And if you say something that is contrary to YouTube, Twitter, and those guys, you can get taken down. So our freedom of speech is totally shot, just as you know that. So that's why we're on different platforms. And after that last conversation we had with Robert Barnes, the attorney, I don't know how much longer Rich Dad will be around. Will there be an accidental drone strike in Scottsdale? You know what I mean? You don't know what's going to happen anymore. Just like, who's that actor who didn't shoot the guy? You know, he pulled the trigger, but he didn't kill her. I'm going, holy mackerel. And now Alexandria Ocasio-Cortez denies that there's smash and grab going on. I'm going, how in the world can you stand there and lie? I just don't understand it. And people actually believe these frickin' liars. I just really cannot believe it. So if I disappear, you'll know why, is I didn't have the guts to keep lying. Anyway, we have a great program today. It's with two very dear friends, John MacGregor. He's a certified financial planner. He's the author of The 10 Top Reasons Why the Rich Go Broke, and they're going to go broke in droves in a few more months or years. And also another dear friend, Ted Siedle. Ted is a former attorney with the United States Securities and Exchange Committee. And just FYI, Ted is with Robert Barnes. I was asking what happened to all the cojones of the attorneys. And it says it's bred out of them in law school. They don't want attorneys with guts. They don't want anybody challenging the system. Or as, what's his name says, Dr. Ron Paul, he says the Fed doesn't like people stealing from them, because it's their game of stealing. So anyway, it's an interesting time, and we've got to be very careful what we say, how we say it, and where we say it, and on what platform we say it on. So anyway, this is the Rich Dad Radio Show. We're on different platforms, and if we disappear, you'll know why. But anyway, we have a very important program today because it's about this book here, Who Stole My Pension? I co-authored it with Ted Siedle. And he's a former attorney with the United States Securities and Exchange Committee. He's America's leading expert on pension looting. So all of you, the reason we say, you can listen to Rich Dad Radio any place, anytime, or go to richdadradio.com if you have friends or family members who are stupid enough to be counting on their pension. Because the reason I'm so hot on this is my old man, poor dad, lost his pension. And he didn't know he was poor until he lost his pension. And he lost it because he ran for lieutenant governor as a Republican, which is an idiotic thing to do in the Communist Republic of Hawaii. Why would you be a Republican in Hawaii? It makes no sense to me. But he ran for lieutenant governor, and the governor, John A. Burns, everybody knows the guy was a crook. He was a police officer, and his best friends were criminals. Everybody knows that. And my father had the guts to, I wish I gave him credit for it, poor dad ran against him, and he lost everything. He lost his pension. They took everything from the guy. So my poor dad was not poor until 50 years old when he had the guts to take on the Communist Republic of Hawaii, which is even more communist right now. I hear they changed their flag from red, white, and blue to just pure red. That's what they've done now in Hawaii. I mean, I love Hawaii. People still say it's the most beautiful place on earth. I said, so is Havana, Cuba. You know what I mean? Give me a break here. So anyway, with that said, it's a very important program about who stole my pension. And the reason it's the dominoes are falling, this is retirement fund giant CALPERS. I think it's the biggest pension fund in America is going broke. Now, that means firefighters, school teachers, public servants, they're all toast. They're all like my poor dad. They're going to find out the government screwed them. Just like I had friends who flew for United Airlines. They don't have a pension anymore. Somebody stole their pension. So that's why this book here, Who Stole My Pension, I wrote with Edward Siedle and me, And we have John MacGregor, because he's a financial planner, and he wrote the book, 10 Reasons Why People Go Broke, is because they trusted the government. They trusted their pension would be there, and it's going to go bust. The biggest bust in the history of the world is coming up. It's pensions. It's a big, big market because they're into everything. They're into all the buildings and REITs and bonds and all this stuff. Pensions are everywhere. So this is the most important program. If you're a baby boomer or if you have parents who are baby boomers, watch this program. Please watch this program. So we have Ted Siedle. Ted, please give us your background. Welcome to the show, and then we'll introduce John. Real quickly, give us your background.
Sure. I'm a former SEC attorney, and I've done over $1 trillion in forensic investigations of pension plans, primarily state and local pension plans. And then I also, a couple of years ago, won the largest whistleblower awards in history from the SEC and the CFTC for a total of $78 million. So I've done this type of forensic investigations for over 30 years now, and a lot of the findings are in the book, Who Stole My Pension.
Right. The other thing too is that for full disclosure, you make a lot of money suing these guys.
Yes. Yes.
Congratulations. I'm glad there's some incentive. Because without that, nobody would know anything. You guys may think, well, that's terrible and all that. But there's so many people who won't do anything unless there's money in it. So I'm glad there's money in suing these guys, because all the years I've been working with Ted now, a lot of the things he said I can now see. Like who was the person in, what's that place, New Hampshire or something? She's now on Biden's staff. Gina Raimondo.
Gina Raimondo from Rhode Island. Yeah.
Rhode Island. Right. And Ted was telling me she is, let's say, of questionable value, questionable competence, and her pockets are always open to a little extra help here. Yeah. They like to make a little extra money here. You know
she has only one constituency, and that's Wall Street. The state workers in Rhode Island hate her. Taxpayers hate her. She was at one point backing Hillary, and then she was Michael Bloomberg's campaign finance director, all over the place. But incredibly well-educated, Rhodes Scholar, completely incompetent in any role she's ever had, especially when she was running the pension in Rhode Island, where she lost like billions of dollars mismanaging the pension, loading up on hedge funds.
And the reason I bring this up is because, well, Ted makes money suing these guys. Well, he has to, because Wall Street has their agents in government everywhere. And so Ted was especially hot about old Gina, and she was still at Rhode Island in the government, working for Wall Street, sucking pension money into Wall Street. I mean, that's the game.
Yeah, that was.
And so Ted kept telling me about that. Then he says, "Oh my God, Biden's going to appoint." What did he appoint her to?
Secretary of Commerce.
Oh my God!
Based on her unique set of skills. Still to be determined.
So Ted and I started talking about her, and suddenly we got this message: you boys had better not talk about her any longer.
Yeah, because I was told not to write about her anymore. Yep.
Right. There might be a drone strike on your house one night, accidentally, just like what's his name, who shot somebody accidentally on the Hollywood set. That was accidental, but he didn't pull the trigger. Give me a frickin' break here. Who pulled the trigger then? You know what I mean? And who put the bullet in the gun? And what we're talking about there is how your pension is stolen. And so if you're an old guy, oh, no, I'm safe. I'm a police officer. I'm a school teacher. I'm a truck, even the UPS guys. Was it UPS that you took on, one of those guys, or FedEx or something, Ted?
Yeah, well, that was the New York State Teamsters, which includes the UPS, a lot of the UPS drivers. Yeah. Yeah. And we did an investigation there. Now we're actually suing them. For mismanagement of the pension. And
I'm glad you do it. So people listen. Without guys like Ted going after those scumbags, we would never know about this thing. Your pockets would be picked. And as poor Dad found out, the only reason people run for office is for one reason: to pick your frickin' pockets. That's the only reason. They're not public servants.
What I'm writing about on Forbes a lot now, Robert, is that these pensions, these state and local pensions, are refusing to give the participants in the fund and the taxpayers prospectuses on what they're investing. So every regulator in the world says, read the prospectus before you invest. Well, these pensions refuse to give the prospectuses to state workers and to taxpayers that are contributing. So nobody knows where the money is. There's this era of secrecy that's about 15 years old now, and the money is all secret. If I invest in a fund, I get a prospectus. If my pension invests in the exact same fund, the pension says I can't see the prospectus. Makes no sense.
And there's one more reason that's personal. My father lost everything, poor dad. And my poor dad also wanted me to fly for United Airlines.
Oh.
So what happened to the United Airlines pilots' pensions, Ted?
Yeah, United was the largest bankruptcy of... They turned over, I think, 6 of their pensions to the government. The pensions were taken over by the government. They were slashed. And the biggest losers were, of course, the pilots, because they had the most to lose. So the flight attendants lost a little something, but the pilots lost a ton of money.
I know I shouldn't be laughing, but it's really personal. My father loses in the teacher's pension, and my guys I flew with in Vietnam, they have to start work all over again because they flew for the airlines. They flew for United. And that's how bad it is. So everybody, let me plug this book one more time. Who Stole My Pension? If you're an old guy like me and you're counting on a pension, read the book. And if you're a young person and your old man's your mother's going to move in with you, read this book, because there's no pension. The idea of go to job gets, and find security in it, and then you get a pension for life, is now a fairy tale. And with that, we bring up John MacGregor, who is a dear friend. We're neighbors in Hawaii. We played rugby for the Hawaii Harlequins. And he is a financial planner. He is a true financial planner because he is a student of the subject. Most financial planners, they take a financial planning course, and in 5 days, voila, they're plotting your future and how much money they can take from your pension, like everybody else does. But John really does care. That's why he wrote the book. He's author of the book, The Top 10 Reasons Why the Rich Go Broke. And it's because it's generally in their pensions. So with that, welcome to the program, John.
Thanks, Robert. Great to be here. Great to be here with Ted. Yes, we got to be careful what we say these days, but that's why I love this show, is that we get to say it. You know what I mean? We don't hold back. So I think that's why it's so popular. But as you said, and speaking of United Airlines, I knew a very close friend who was a high-end executive there, had a ton of stock options in United Air. He had a pension, United Air pension. He had a 401k loaded with United Air stock, and we all know what happened. Why? Because he trusted his employer. He thought he was set for life, and that was just an absolute train wreck. I mean, this is an issue. I'm seeing it at the ground level, right? I've been in the industry for over 27 years now, working with, I estimate, over 5,000 people of all walks of life, all demographics, rich, poor, women, men, etc. And I've never seen it this bad. I mean, public pensions, they've seen their liabilities grow over the last 20 years, but particularly since COVID. I mean, these plans are now facing increasing pressure to generate performance, and now they're reaching and they're using risky investments to do so. I mean, think about this. Nearly every state in America is facing a pension shortfall. States have a combined $4.2 trillion in pension liabilities, but less than $3 trillion set aside for the pensions. And the typical state has about 70% of their fund is funded. And with this funding shortfall, we've got 10,000 people hitting 65, which is retirement, every single day. These states are headed for a pension crisis, especially when we see where the markets are right now. And, this market can't keep going up. And, I'm predicting a burst of this bubble. And then with interest rates going up, that's going to send the bond markets down. It's the perfect storm for so many people.
So anyway, what prompted this Rich Dad Radio show is this article here. It says, retirement fund giant CALPERS votes to use leverage, more alternative assets. It means they're desperate. They're going to use higher risk, so-called assets. And then another big asset that many people are counting on is their house. And so Rich Dad Porter was written 25 years ago, and people say, oh, I did what you said. I'm investing in real estate. I said, that was 25 years ago, idiot. I mean, just because I made fortunes investing in real estate 25 years ago doesn't mean the markets are the same. So I'll be on record for saying that because I cringe every time somebody comes up to me, oh, I'm following your advice. I'm investing in real estate. I said, at the top of the frickin' market? You got to be crazy. I mean, you've got to be really smart to make money when that real estate market comes crashing down. The same as gold will crash, silver will crash, and Bitcoin will crash. Not because they're bad assets, it's because the shortage of money. There is such shortage of cash right now, and it's going to get worse. That's what John and I are studying this thing with George Gammon and Jeff Snyder. The big problem is not in the real estate market. It's really in the shadow banking system outside the control of the Fed. So that's why this program on Rich Dad Radio is about the retirement giant CalPERS, but more is about who is stealing your pension as we speak. So you old guys, pay attention. You young guys, you have mommy and daddy are going to move into that spare bedroom of yours, pay attention. And with that, gentlemen, we'll start with Ted. What does CalPERS mean to you, the California pension thing?
Well, as you said, Robert, it is the largest pension fund in the United States and I believe in the world. And for many people, since it's the largest, they consider it the gold standard. You know, what CalPERS does, all other pensions should follow as best practice. But in fact, they're terribly mismanaged. Their former chairman of the board committed suicide because he was going to prison. Another member, Fred Buenestro, he went to prison as well. And just a pension that's been riddled with scandal for decades now. And this newest news that you just read from the Wall Street Journal, they're significantly underfunded. And they've decided the solution is let's gamble big. We're going to increase our leverage and increase our use of alternative investments. But of course, what they're not saying is every alternative investment that I've ever looked at is permitted to do unlimited leverage. So if alternative investments are already highly leveraged, highly risky, high cost investments. So you're going to add a little gasoline on that fire by leveraging the alternative investments. I mean, it's just, it's a prescription for disaster. It's exactly what they tell you not to do when you're in Vegas. If you're down 30, 40, 50%, don't double down on your bet. Get the hell out. Go home,
Well,
so,
Ted,
very disturbing.
You're hurting me because when my wallet company was going broke, my two partners and I decided, we're living in Hawaii, and we decided the way to solve our financial problems was to go to Vegas.
Evidently, that's the advice CalPERS is following. They are going to Vegas.
Yeah,
and the likelihood, what's the likelihood that this massive hundreds of $1 billion bet is going to work out? Not so good. But I'll ask John. What do you think, John?
One last thing. Let me tell you this horror story because I must confess my sins. So we go to Vegas and we're up. I'm just rolling the 6 and the 8, 6 and the 8, 6 and the 8, and I'm on a hot streak. And so I think I was up like $3,000, which was a lot of money in those. And so we're standing there. I said, okay, we made it. We got $3,000. We can go back to Hawaii. We can fund our little business. And somebody says, no, let's roll it one more time. And I don't have to tell you what happened with that last roll. John, so tell us your background in financial planning and why this is concerned.
Well, just sticking to the theme of CalPERS, it's the largest fund, as Ted mentioned. It's $185 billion short in what they owe to their employees. Yet they have the third highest payout to their employees. It's a train wreck. I mean, you look at what they're doing to their fund. I love how they started off with a 7% target rate that they're going to hit. They didn't hit that, so they just lowered it. All right, let's shoot for 6.8 now. And in order to do that, they're needing to stretch for yield, meaning they're going to have to take riskier bets to hit that portfolio. Now they're moving, as you said, into alternatives and infrastructure and private equity and all these kind of exotic kind of instruments, no one knows what's going on behind the scenes because, as Ted said, they won't even share the prospectus because they claim it's trade secrets. The other fascinating thing I found, and I've seen this in boards that I've been a pension consultant for several years in my career, is you look at the board members at CALPERS. I mean, I'm sure these are nice people, but they have zero qualifications in terms of investing. You've got a director of parks and recreation. You got a guy who teaches glazing, ceramics. You've got, benefit directors, but zero investment experience. It's amazing. It's like giving a child a loaded handgun. And these people are responsible for the largest pension, as Ted said, potentially in the world. It's scary.
So, Ted, what's your crystal ball saying about the future of CalPERS?
Well, CalPERS, I predict the future will be just what happened to you in Vegas. This is going to go very badly. Now, the question is, if you don't allow people to see the investments and you let the money managers set the values themselves, how long after they lose big will that become public? It won't become public right away because there's a lot of secrecy there that will conceal what's going on. But I predict it'll work out very badly. They will not beat the global financial markets. And if this worked, why didn't they do it 30 years ago? Because it wouldn't have worked then. It's not going to work now. And this is, final note is, to me, this is the riskiest market I've ever seen in my life. And not because of valuations or whatever, simply because of the amount of secrecy in the market right now.
So are you getting excited about suing them too?
Yeah.
We'll go to Vegas and you can buy the drinks after you see them. So we come back.
The problem is if these new strategies work, this shift in alternative and risky assets, if they work for the short term, it won't be long before they're drunk on this new strategy. I mean, they're going to talk about doubling down. They're going to say, see, we were right. Let's pour more into it. Let's pour more gas onto the fire.
Yeah, and that's what's going to happen. So with that, we'll be back. Most important subject, again, we have John MacGregor. His book is the top 10 reasons, top 10 reasons why rich people go broke. And most of it is done because they have a crappy plan. Right, John?
Yeah, absolutely. No question. There's no plan.
They have no idea what they're doing. Mm-hmm. And John and I both from Hawaii, and he was dealing with some of the so-called smartest money in Hawaii, but they went broke too. Mm-hmm. And that's by Ted Siedle, and I wrote this book, Who Stole My Pension? And it's very close. It's very close because as this article, retirement fund giant CalPERS votes to use leverage, more alternative assets. The mistake there is the word asset. Really they're talking about collateral. What's real, what's not real. And so when they talk about an asset, that'd be like betting on me hitting 6 and 8 forever on the dice table. It's not going to work. So the question we come back is, what can you do? Because this is going to be like the asteroid hitting the Pacific Ocean. Hawaii's going to get drowned because it's already drowning anyway. But anyway, is what can you do if you have one of these pensions or you have a family member in one of these pensions? We'll be right back. Welcome back. Robert Kiyosaki, the Rich Dad Radio Show. The good news and bad news today about pensions. You can listen to Rich Dad Radio anytime on iTunes, Android, and now we're on Rumble and Locals and all this other stuff because we'll probably get taken down every other week because our freedom of speech has been denied. And all of our programs are archived at richdadradio.com. We archive them for one reason. We sell nothing. We make no recommendations. We're a pure education company. And one of the best ways you learn is by listening to things once or twice because repetition is how we learn. Like you don't become a great golfer taking one drive off the tee. You keep practicing. So go to richdadradio.com, especially if you have friends, family members, and business associates, and especially if they're counting on their pension. Or you are in a 401k counting on the stock market keep going up. Or you bought real estate hoping it goes up. Or you have gold, silver, and Bitcoin hoping it keeps going up. Because I have bad news for you. This notice here, the retirement fund giant CalPERS, I think it's the biggest in the world. If they go bust because they're using riskier alternative assets is the wrong word for that. It's collateral. What is of value? Who's the counterparty in this whole thing? Who are they counting on to pay in case the asset goes bad? That's what it's, if the asset. So like if gold goes bad, you don't have to worry about it because the counterparty to gold and silver is God. And the counterparty to like Bitcoin is the network and the people. You're not dependent upon the Fed. The problem with a dollar is dependent upon the Federal Reserve Bank, and the problem with stocks is based upon those criminals in Wall Street. And that's why I have no shares in the stock market. I've taken companies public. I know what goes into a share. I don't trust them. Now, John is the expert at it because he's on the financial planning side. So that's why he's one of the Rich Dad advisors, because most people should be in stocks, bonds, mutual funds, and ETFs. With that said, we'll go into, what was the question?
So I had a question. We're seeing a ton of, in these different municipalities around the country that are implementing vaccine mandates for a lot of their city workers, fire, police. Exactly. So we're seeing that a lot of them are taking early retirement or leaving, their post. So my question is, does that have any immediate impact to these pensions? Does that accelerate the problems that we are seeing?
John, what's your answer to that? Because you're the expert on that.
Yeah, it's a great question, Sarah. And these plans are now going to face even increasing pressure to generate performance, as I said earlier, because as more people leave the plan, that's less money going into the fund. And as those people leave, they're also pulling their money out for their pension. So it's a double-edged sword on these plans. Now we've got, as I said, 10,000 people hitting 65 every single day. That's a lot of people retiring. On top of that, add COVID and all those people that refuse to get vaccinated for whatever reason, they're being forced out of their employment as well. So it's a huge drain and strain on these funds.
So Ted, as the expert on funds, and Ted's a former SEC attorney who makes his money suing these guys for their incompetence. I'm glad you do that, because as all the years we've worked together, Ted's always reminds me of the criminals who are now in public office, and they don't represent the people, they represent Wall Street. If you know that, you'll know why Ted's job is important, to keep them honest. So Ted, what do you think this COVID thing or mandates and shutdowns, how is that going to affect pensions?
Well, I'm not sure how it's going to affect pensions. I mean, as some people leave, younger workers may come in. Very hard. I wouldn't really have a firm answer for you on what the impact of COVID will be on pensions.
Okay.
John may have another view on that.
So let me ask you this question. The big question is, what do you do?
Exactly.
Because even if you don't have a pension in CalPERS, this is like the asteroid strike in the middle of the Hawaiian and Pacific Ocean. There's going to be a wave so big, because this is not going to affect just money and markets and real estate and things like that. It's going to affect lives, big lives. Like I said, my classmates I went to flight school with, they lost their pensions. It's a thing called PBGC, Pension Benefit Guarantee Corporation. And John mentioned something most people miss. It's a 7% return. So let's start with 7% return. What does that mean to you, John, when they say they got 7%?
Well, that's the target that these funds set for themselves in order to make their obligations to their employees that are retiring. They need to hit that certain target market based on the actuarial assumptions that they've created. It's an arbitrary number. It's really a number that they're hoping to reach for. And it's nearly impossible in this environment when we have a stock market at an all-time high and interest rates at an all-time low. Hitting 7% on a consistent basis is very difficult, which is why CalPERS just lowered their target return from 7% to 6.8%, because they know they can't hit it. And that's why they're stretching with more riskier assets. That's the challenge.
Yeah. And the problem with that word asset is, my definition is something that puts money in your pocket. And these assets these guys are so-called buying to make the 7% are going to collapse. That's the problem, because there's nothing behind them. The counterparty is a crook. The person that's guaranteeing the asset is going to disappear. So that's why there's so much to understand. What's that?
Yeah, I'll just add to that, Robert. I can't tell you how many individuals I've worked with that have pensions, and I'll show them how underfunded their specific pension fund is, and they'll say, it's guaranteed. It's in writing. They promised me that benefit. And I'll tell you, it's a very hard conversation to get people to realize. That law changed in 2014, where now pensions can, under the law, cut benefits when they can prove they're under financial distress. Most people don't realize that. And we're already seeing, and Ted could add to this a lot more than I could, we're already seeing pension benefits already in place being slashed. If there's no money, there's no money. I don't care how well written that guarantee is.
So, Ted, would you briefly explain what the PBGC stands for?
Yeah, the PBGC is the Pension Benefit Guaranty Corporation. That is supposed to be the backstop for all corporate pensions, not public pensions, but corporate pensions. But the PBGC is substantially underfunded. Last I heard, it was about $54 billion underfunded. So the federal agency established to bail out pensions needs a bailout. They're $54 billion underfunded. And so and when the PBGC does, quote unquote, bail out a pension fund, still the benefits get slashed. It's not that like the benefits are guaranteed dollar for dollar. Only a certain amount of the benefits are guaranteed. And that's why you see the pilots, their pension may go from $140,000 a year to $40,000 a year. Or I think the maximum benefit the PBGC pays is like $50,000 a year. So it's a very precariously, truth be known, it's bankrupt. The PBGC that's supposed to be backstopping all corporate pensions is itself bankrupt, but that's just being kicked down the can. No one's doing anything about it, but it's running at a huge deficit.
So given that, because generally what the PBGC backstops is called a DB, defined benefit pension plan. So when you used to work for Ford Motor Company, that guaranteed your retirement. Then what happened in 1974 was a thing called ERISA, Employee Retirement Income Security Act, which led to the 401k, which led to guys like John MacGregor's profession jumping up, because now the corporations, the defined benefits, were shifting to a defined contribution pension plan, which a 401k IRAs are. And that's where John comes in. So, John, that's when you pick up a client because they now have a 401k or whatever they have, an IRA if they're independent business person. What do you see happening to their retirement plans for their defined benefit? They shifted to defined contribution for defined benefit, and they're now in IRAs and Roth IRAs and all these mumbo jumbo of alphabets. What do you see from a financial planner's point of view?
Yeah, well, as we see the pension plans disappear or severely being cut to new employees, a lot of companies don't want to offer a defined benefit or pension plan. That's the same term, because they don't want to be on the hook for paying these people for the rest of their lives, especially as life expectancies grow. That's why we've seen this huge shift from pension plans or defined benefit plans to defined contribution plans like 401ks, 457s, or 403bs. So now the individuals are self-reliant on themselves to plan their own retirement rather than rely on a government, state, or private pension. And so with people putting money into this 401k, they're really at the mercy of how the markets perform. Now, we've had a great bull run for the most part over the past 30 years, but that party is not going to go on forever, sadly. So people really need to really think about what they're doing, and they cannot just leave it up to hope. I've heard too many people say, well, I just hope it works out. I'll tell you, hope is not a retirement strategy.
So we have Ted, who operates from the inside, and he knows what the biggest pensions are doing. So Ted, is there anything that from what you've seen lately, that people should know about?
Well, the fundamental thing every public pension investor should take away from this conversation is the need for transparency. Over the last 15 years, public pensions were 15 years ago and are intended to be the most transparent of all pensions in the world. Every state has a Freedom of Information Act, which requires that how public money is invested be subject to public scrutiny, that there be accountability. Over the last 15 years, that transparency has disappeared. And there's a reason for that, because when somebody is not willing to show you the documents, it's because there's something in the documents they don't want to show you. So the key thing, if you're a participant in these funds, or if you're a taxpayer contributing to these funds. Both of these groups we refer to collectively as pension stakeholders. If you're a stakeholder in a public pension fund, which chances are you are, you should demand transparency, and you should go to your state securities regulator and say, there's a state regulator in every state. Go to your state regulator and say, I'm not getting the prospectuses and the other documents I need to evaluate whether this pension is being well managed. And that is your best insurance that the pension is being properly managed. But right now, there's this whole aura of secrecy across the country. Every city, state, every county, they're blocking giving the prospectuses to the stakeholders. And as John mentioned, claiming they're trade secrets here. There's no trade secret. If a prospectus is broadly disseminated to 1,000 wealthy investors, it's not a trade secret. So anyhow, my advice to anyone listening is demand transparency at your local pension fund, and you're going to be amazed. If you get transparency, you're going to be shocked and amazed at what you see in those documents.
So then that's why you were so adamant that Gina Romano, who was in Rhode Island, is now running the Commerce Department of the United States. And she's really an agent of Wall Street. I mean, that's how pervasive this is. So the reason I wanted John and Ted on this program is Ted sees it from the inside, John sees it from the outside, and both pictures are not good. So the final words are, besides demand transparency. So what you see that you've been looted as who stole my pension states, and for John's thing is why the top 10 reasons why people go broke. What do you recommend people do? Because I suspect people are talking about inflation. I think we're in depression right now, and we're going to be the biggest depression in world history because the Fed can't not keep printing money and hope it stays afloat because the shadow banking system, or called the euro dollar system, is 1,000 times bigger than the Fed. So we're going down either way rich, whatever's going to happen. So John, for the private person who has a 401k or an IRA, what do you recommend?
Yeah, so if I look at the bigger picture, right now, 78% of people are living paycheck to paycheck, 78%. Then we talk about the three-legged stool, as I often refer to. The three-legged stool in financial planning is the pension, it's the government pension, in our case, Social Security, and it's personal savings. We've already talked about the demise of the pension and how underfunded and how poorly managed they are. Now we have Social Security, which is the second leg of the stool.
And Medicare, which is a huge expense.
That's due to be bankrupt, depleted in assets. You call it an asset, as you mentioned, by 2034. Then you have personal savings. This is the amount of money people have accumulated on their own. The average person, or 65% of people, could not come up with $500 for an emergency expense. 65%. So as I say, this is the perfect storm. But sadly, too many people are unaware that this is even happening or even possible. They think everything's going to work out in the long run. And I'll tell you, in the long run, we'll all be dead and broke. If people have to pull their head out of the sand, and they've got to get proactive, and they can't rely on these plans for their financial future or for their family. Otherwise, they'll never be able to retire or retire the way they've always envisioned for themselves.
Well, what can they do, John? What can they do? You know, what both of you guys are saying, unfortunately, is be aware. But I can be aware. I have basically cockroaches or termites in my house. Now, what do I do when I realize the cockroaches and termites are the guys I trusted?
Well, I'll tell you one thing. You'll find this very interesting, Robert. In every state and county where there's a pension fund today, there are Facebook groups that are sprouting up that are doing the work that traditionally, supposedly, unions would do. The number one worker priority right now is protect my pension. It's not make my workplace safer, COVID aside. It's really protect my pension. That's what these state workers are looking for their unions to do. But the unions are getting paid by Wall Street too. They're not doing this. So the Facebook groups, in Ohio, where I'm doing a forensic investigation, 19,000 school teachers came together to raise $75,000 for me to do a forensic investigation. 19,000 school teachers who belong to a Facebook group called STRS, Ohio Watchdogs. The union didn't do it. The pension fund didn't want it done. The only way it got done was through Facebook groups. So my thought, look around. Is there a Facebook group that you could be a member of? This is for the pension funds. There are Facebook groups for IBM retirees. There are Facebook groups for, any major corporation is going to have a Facebook group that some of which will be focused on pensions.
Good, but okay, John, but we're still going back to what can you do? Like if my poor dad, when he lost his pension because he ran for lieutenant governor as a Republican, he didn't know what to do. At 50 years old, he found out his PhD didn't help him at all. So that's kind of why I wrote Rich Dad, Poor Dad. My family got so upset with me. How dare you call your father a PhD? How are you going to call him poor? Because the facts are he was broke. At 50, there was nothing on his fund. He didn't know what a financial statement is. So, John, what do you recommend people do? Go back to the stock market?
Yeah, no. Let's get into it. So, as Ted said, transparency is key. People really need to understand how their pensions are being managed. So that's one thing at a high level. But at the grassroots, it's blocking and tackling. It's basic financial planning. They need to be aware of how they're managing their 401k, get help and get assistance. Too many people put money into it and they don't even invest it. It just sits in cash. Most people haven't even looked or even asked for advice on how to manage their money within their 401k. There are plenty of resources. Then at the home, most people are overspending what they're generating. Period. That's why most people are living 78% of people are living paycheck to paycheck. They outspend how much they earn. So people really need to take a close look at where every dollar is going every single day and every single week and every single month, because that's what's draining people's bank accounts. That's why most people couldn't come up with $500 for an emergency expense. So these are just basic things. And then the last thing I'll say is given the uncertainty in the job market and all the changes that are going on with artificial intelligence and all these other things people really need to start thinking about alternative sources of income, a side hustle, a new business, whatever that is. People need to find other sources of income outside of their job, period.
So fantastic. So Ted, what do you recommend besides hire you to sue the fricker?
Well, let me mention one thing on the 401k front. One of the real problems with 401ks is 401ks allow for no real participant decision making. The employer picks the funds, the investment options on behalf of the workers. And if you're in a 401k plan where the investment options suck, there's not much you can do. So that's another issue. Is look at if you're in a 401k, look at the funds, look at the fees, and challenge what's being done. What we call the menu, the investment menu.
Definitely.
But again, transparency, information, get together with others in the plan to agitate, to make change. Because if you don't do it, no one else is going to.
So there's one more thing I'd like to bring up that everybody be aware of. It's called Obsolescence. There's a book called The Price of Tomorrow by Jeff Booth. He talks about when not that long ago there was a company called Blockbuster Video where you went in and you rented your video from. Today you're in Netflix. So what happened is Netflix took off and Blockbuster went down. And that's going to be happening more and more as technology continues to wipe out certain companies. So that's another thing to be aware of. So we don't give out financial or investment advice, but it's a good place to start is to realize that there's a lot going to happen in the next few years. People are counting on inflation. Technically, we're in a depression, and a depression is different than a recession. A depression is subprime growth. In other words, if growth should be at 3%, we're growing at 2%. And then John and I are going to be studying with George Gammon and Jeff Snyder. We study constantly. It's one thing we do at Rich Dad. And Snyder's talking about why the shadow banking system with a long end of the yield curve is going to crash. because it's going to crash in the euro dollar system. And people don't know, especially Americans, don't know that there's a world out there. They think everything is LA, like Los Angeles. And we're about to get frickin' hammered. So please, increase your financial education. One of the reasons Kim and I created the Cash Flow board game in '96 and wrote Rich Dad, Poor Dad is the answer is inside you, but you have to want to study the seek your own resources, understand the source of your revenue, but also another thing called counterparty risk. Like if you own Amazon, the counterparty is Jeff Bezos. You own gold, the counterparty is God. You own silver, the counterparty is God. You own Bitcoin, the counterparty is the network and blockchain. Now, will that prevent you from losing everything? No. But like in a depression, gold, silver, Bitcoin will go down, but they will not go down as far as a stock like, Blockbuster Video disappeared. So those are all considerations when you're studying. I'm very optimistic about the future. I'm investing more money in not stocks, but my own startups. But that's what I do. And then I own stocks via the startup. That's how but I have control over the board and things like that. So those are some of the differences. And I started early. So today is the earliest day you got. So with that, I want to say thank you to John MacGregor. His book is The Top 10 Reasons Why People Go Broke. And Edward Siedle, Who Stole My Pension. This is not a time to hope and pray. Thank you, guys. And we're right back.
Thank you very much. Thanks, guys.
Thank you.
Appreciate it.
Thanks, guys. Thanks for your information and your wisdom.
Thanks, Robert. Appreciate it.
And we'll come back with the final words on this with Sarah. We'll be right back. Thank you. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show, the good news and bad news about your pensions. I want to thank John MacGregor. He's the author of the book, The Top 10 Reasons Why Rich People Go Broke. And one of the reasons is financial planning. I mean, their retirement drives them broke. Or they have a catastrophic illness. That's what wipes them out as you get older. And also Edward Siedle, Ted Siedle, he's the author of this book, Who Stole My Pension? And again, you may not have a pension, which might be a good thing, but you have parents or friends or people who are counting on the pension. And Social Security and Medicare are broke. And these are massive problems. I was saying to Sarah just now, I'm feeling kind of nauseous because, probably, I don't know how many years, 40 years ago, I saw this coming. And it's worse than I thought it is. And by the way, we interviewed Robert Barnes. Please listen to that because it's all related. Everything we're talking about, Wall Street, the Fed, our pensions, and the government is all related. They're all coming from the same source of problems. And I wish it was as simple as take 2 aspirin, then you'll be fine in the morning, because that's not the answer. There is no easy answer. Even gold, silver, and Bitcoin, in a depression, in a market crash, which I say coming, they'll crash not because they're bad, but because people go into what I call a short squeeze, a liquidity crisis. They need to pay bills, so they're going to sell what is the most liquid. And what's happening in Afghanistan now, I hate to say this, but parents are selling their children into prostitution because it's the most liquid, because they need to feed their kids. But they'll never report that. They'll never report that. Now, is that going on in the States? Absolutely, it's going on in the States. That's sex trafficking. It's going on everywhere. That's why when Biden opening the border, letting people through, drugs and sex trafficking go up, plus crime, smash and grab. And then people like Alexandria Ocasio-Cortez deny it's happening. I'm going, holy mackerel. So ladies and gentlemen, we have a problem. And I think I was saying to Sarah just now, I feel nauseous because I knew this problem was coming. I didn't think it was going to be this big. So even Robert Barnes said it. He was the attorney he with George Gammon are suing the Fed, and they're going after the COVID vaccine. They're all related. If you can understand, it's all related. And so it's not take 2 aspirin, wake up in the morning, you'll feel fine. Because this stuff's not going away for years. And I hate to say this, it's not going to be inflation. It's going to be depression. And depression is kind of like how I feel right now. I feel depressed because I wish I could give you the right answer. But I don't have the answer. But you do. But you have to find out, the word education stands for educe. You got to draw out the rich person in you. Otherwise, you're screwed. because our schools teach us to be average, mediocre, and wimps, cowards, snowflakes. I've never met so many people so afraid of their feelings being hurt, and then they get on the cell phone and they attack you. The cancel culture, because you hurt their frickin' feelings. And they like to have their feelings hurt. I just can't believe it, because I went to military school. My feelings were hurt every other second, and you got used to it after a while. You say, okay, well, is that the best you can do? You're screaming at me. You calling my mother this, you calling me this, you calling me that. Is that the best you can do? And that's why the military school does it that way, to toughen you up so you're not giving in to your petty ass emotions. Oh, you hurt my feelings. That's snowflake shit. So that's what Rich Dad does not stand for. If your feelings are hurt, good. Look at it as a good thing, because now you can make corrections and get stronger from the hurt. It's like if you break your leg, sometimes it heals back stronger. Sometimes it heals back worse. But that's what real life is. And today we have too many people whose emotions are being hurt. And we've had two great shows today, thanks to Sarah, is Robert Barnes. He's about how he's taken on the Fed, COVID. He's taken on the cases that he represents. Kyle Rittenhouse, who's a kid who shot 3 people who all of a sudden were white, but they turned black in the press. Give me a break here. We're lying to our people, and nobody says anything. And you get taken down by socialist media. And we'll probably get taken down for this one too. Our freedom of speech is gone. So before they yank me off here, the reason we created Rich Dad was so that you could play the cash flow game. There's a million ways you can get rich. For full disclosure, Kim and I invested more money in 2021 than ever before, but we're investing in our companies. We invest with partners. We're going to make more money. Kenny MacGregor and I bought another huge property in Austin, Texas. But we've been doing this for most of our lives. I'm not saying don't invest. I'm saying get smarter before you invest, or follow Dave Ramsey, live debt-free, cut up your credit cards like Susie Orman says, and live like a monk. It's really your choice here. But there's more ways of getting rich today because the world is changing that fast. So that's my answer right now. So let's go into what you picked up from the show, Sarah, because I really commend you for getting the show back on track.
Well, thank you. You mentioned towards the end, we talked a little bit about what's the answer? What can people do? And this problem, like you pointed out, is so big. It's not just take 2 aspirins. You really have to get your financial education up there, because otherwise you will be screwed.
Right.
And you'll be like, oh, what happened? That's the first line of defense is you have to get educated.
And that's why with a cash flow board game is the way you get educated is you have to do something. You can't learn to play golf reading a textbook.
Well, and what's great about the cash flow board game is you're using fake money.
Yeah.
You're not testing the waters with your own hard-earned money. Yeah. So you can make the mistakes and really learn. And so that was that to me. I know we'll get comments. Oh, they didn't say what we should actually do. But that's how big this problem is there's not just one answer, because for everybody it's different.
Well, the thing is, Sarah, I'm at my age. I'll be 75 this year coming up. Boy, that's an old man. My father only lived to 72, so I got him by 3 years now. That's how I judge everything. They'll outlive the old man. That's it. So I'm doing pretty good there, 3 years. But anyway, people come, oh, guess what? I'm doing what you said. I'm investing in real estate. I'm going, that book was written 25 years ago. And not that real estate's bad, but if you're an idiot, the mistake's going to be bigger. Right. Like you just bought the Titanic. Yeah. But for full disclosure, I'm buying another Titanic right now. 3 months ago, it was called an apartment house in Austin, Texas. Yeah. But we've been doing it for 50 years. Right. So what else goes on, Sarah?
So the other thing to bring up is you had mentioned pension. Not everybody has a pension. Not everybody has a 401k. However, if you live in a city and pay taxes, that pension does affect you. Yeah. Because it's costing the taxpayers trillions of dollars. As I think John MacGregor said, it's $4.2 trillion in pension liabilities right now.
And I think the biggest problem is, as Ted Siedle points out, is the people in the government work for Wall Street. Right. That's Gina Romano.
So the people who are supposed to be looking out for you are the ones stealing from you.
Yes.
Right.
Yes. So if you can understand how big the problem is, and one of the reasons I have a great team around me, like Dr. Nicole, Sarah and I see her, we ask her questions about what's really going on with COVID. Otherwise, They say, well, have you been vaccinated? Mm-hmm. There's no answer but get vaccinated. Mm-hmm. Now, what if you don't want to get vaccinated? Well, then they take your freedoms away. Right. That's how bad it is.
Right. And that goes back to the Robert Barnes episode that we had, which is strictly about how our freedoms are being stripped. Mm-hmm. Yeah. Yep.
So I don't really have an answer. Any other thing you picked up, Sarah? Because
one last thing John said, John hit it out of the park, I think, this interview. He's becoming one of my favorite guests. Yeah. But he said hope is not a retirement strategy. Correct. And I think that you'll pick that up in his book if you happen to read his book. Is so many people hope and pray that the stock market will keep going up, or that they'll get the returns that they were promised in their pension. And that is not a retirement strategy. So I can't stress this enough. Get the cash flow board game and really focus on your financial education in 2022.
Right, and be careful who listens, because Robert Barnes is suing the Fed
and the FDA
and I don't know how he's still standing.
I think he mentioned he sued the IRS 10 years ago. I mean, he's not afraid to take on the big guys. But anyway, so sorry to interrupt.
No. So really, that's it, and it's who you listen to. Like. I have a lot of attorneys. I mean, a lot of them. And they're not strong. They're smart, but they're not gutsy. Mm-hmm. Barnes has got guts. Now, if you don't have guts, don't listen to Barnes, because he'll scare the crap out of you. You understand? I mean, that's what we're saying here. And if you don't have guts, don't listen to Rich Dad Radio. Don't.
Yep.
Because we talk about taking responsibility for your life. And what our schools are teaching us is that you have rights, but you don't need responsibility. I've never seen so many weak people. You hurt their feelings at a split of a hat. They take you up on their iPhone and they trash you in the mob or whatever you guys call it. Those guys call it right now. And the Bitcoin guys are going to nail me. So, well, you said Bitcoin. I said, I still own Bitcoin, but I bought it at 6,000. Mm-hmm. Mm-hmm. So I think today's about 50,000 as we speak. I'm still in the money. But I was early into it. I'm early into gold. I'm early into silver. I'm early into real estate. But I never stopped studying. Mm-hmm. That's a big difference. Right. And Sarah said it the best. As you play the cash flow board game, you're learning with your hands. Because as Maria Montessori, who's a Montessori school system, says, basically what the hand does, the mind remembers. But if you just try to remember this talk, you won't remember anything. So you get the cash flow board game. You have to take the thing, but you're gaining muscle memory. And muscle memory is how you learn, not memorization. And too many of these snowflakes, I've never met so many weak men in my life. I'm serious. I'm a Marine. One of the reasons I went to military school is because I was a wimp. I knew I was a wimp. My father called me a sissy several times because I didn't like football. Now, I love playing football. I just didn't like the practice, you know what I mean? Mm-hmm, mm-hmm. And John and I met because our sport is really a rugby union, not gridiron football, but still a good sport. The point is, the reason I went to military school is because I was a wimp. The problem is, as Sarah knows, I got a little too obnoxious about it. Because when somebody yells at day one at the academy, this is in New York, 1965, 18 years old, they're screaming at you. They're in your fucking face. And if you can't take that, you're never going to make a military officer. You're not going to make it. The same is true in life. But I meet so many people now, you hurt my feelings. You triggered me. I need to go and suck my thumb for a couple of years and hate you and then trash you on Facebook and trash you on whatever you guys do, you frickin' wimps. And so my answer is get tougher, mentally, emotionally, physically stronger, braver, more courageous, play the cash flow game. Lose as much money in the cash flow game as you possibly can, because I've lost millions. Well, that's why I know so much today. What at school, at Snowflake don't make mistakes, don't lose money, and give your money to Wall Street. But as Ted was talking about, Wall Street has its representatives in our government. And as John was saying, well, who represents your pension plan? John was laughing. They have these art teachers who teach how to glaze pottery. And they're running your pension plan. Ladies and gentlemen, wake up. Wake up. So thank you for listening to the Rich Dad Radio Show.